Good morning. Global markets are navigating significant geopolitical currents today. News highlights reveal robust trading gains for financial institutions like UBS, which reported an 80% profit surge. French oil major Total also saw profits jump 29%, driven by the ongoing war and elevated oil prices. This underscores the great commodities disruption narrative, with WTI crude oil climbing to $101.41, a 1.48% increase. Concurrently, uncertainty surrounding OPEC's future intensified following Abu Dhabi's decision to exit the cartel. This development introduces further complexity to global oil supply dynamics. The persistent strength in commodity prices continues to fuel inflation concerns across the board. The U.S. 10-year Treasury yield advanced to 4.35%, reflecting these underlying inflationary pressures. This upward movement in yields suggests market participants are pricing in sustained price increases. Broader equity markets experienced a pullback today. The S&P 500 declined 0.49%, while the Nasdaq Composite fell 0.9%. The Dow Jones Industrial Average saw a modest dip of 0.05%. Within megacap technology, performance was mixed. Apple and Microsoft posted gains, rising 1.15% and 1.04% respectively. However, Nvidia, Amazon, Meta, and Tesla all registered declines. Sectoral performance showed interesting divergences. Real estate and financials were notable outperformers, gaining 9.41% and 9.21%. Consumer defensive and healthcare also saw positive momentum. Conversely, the energy sector surprisingly shed 5.05% despite rising crude prices, potentially indicating profit-taking. The VIX, a measure of market volatility, remained relatively stable at 17.84, showing a marginal 0.06% increase. This suggests near-term volatility expectations are contained. The dollar index edged up 0.04% to 98.68, reflecting a cautious market sentiment and some safe haven demand. Looking ahead, investors must closely monitor the evolving geopolitical landscape. The trajectory of commodity prices, particularly oil, will be a critical determinant of market direction. Any further developments regarding OPEC structure and output policies warrant careful attention. These factors will heavily influence inflation expectations and monetary policy outlooks. We anticipate continued market sensitivity to these macro drivers. Subscribe to the channel for daily macro market updates.